Hey everybody, Rob Maurer here. Happy Friday. Today we have a relatively lighter news day to end the week. We've got some rumors that are popping up out of China. We have personal consumption expenditures report and a few other items as well. Tesla today on the day down 1.75%, closing at $123.15, while Nasdaq was up 0.2% today. So despite some of the comments from Elon last night, as we talked about, a little bit of a mixed bag in terms of how the stock might react to that, but ultimately, his stock comments in terms of not selling stock didn't quite carry through from the after hours yesterday, where we saw a little bit of a rise. Underperformance again from Tesla today. It was still a pretty high volume day today for Tesla again, 166 million shares traded. So I think that's the third highest volume that we have had. So we didn't end up seeing a Form 4 from Elon last night. So this volume is being driven, it seems, from other parties. Of course, we won't know for sure on all the days this week until we get into next week. But definitely interesting to see this high volume. As the price declines, you might expect the volume to increase a little bit just naturally as it becomes less dollar volume per share traded. So that is something to keep in mind too, as the price is quite a bit lower now these days. All right, personal consumption expenditures. We won't spend a ton of time on this because they pretty much came in as forecast. So we're looking at the year-over-year number right now, non-core. This came in at 5.5% year over year, but you can see it is a nice drop from where we've been, continuing to just kind of see a peak and hopefully trending down. I think this is the lowest in almost a year, or a little bit over a year it looks like, so good to see that trending down. On the core side, if we look at month over month here, came in at expectations, 0.2% increase month over month. Again, lower than we have seen the last 3 months, which is nice. Maybe not necessarily completely telling, as this has been a little bit of a rocky road, but we're still seeing a little bit of a downtrend in the year-over-year number as well. 4.7% for core year-over-year, which is close to the lowest that we've seen in the last year. We have had that 4.7 number come a couple of times and then it bounced back up. So hopefully this time we don't see that and we'll continue to see this trend down when we do get the December number in about a month. All right, moving into the Tesla news, we've got a price target cut from Wedbush. We'll cover the stock thing here first. They did lower their price target on Tesla from $250 previously, now to $175 per share. Dan Ives, of course, the analyst there, talking about how, as we heard Elon, sort of allude to on the call, they believe that Tesla is, cutting prices with the additional discounting. Inventory is starting to build, and that is in the face of a likely global recession. He's saying that Elon Musk is at least perceived right now as being asleep at the wheel or not focused on Tesla. I think Elon hopefully addressed some of those concerns in that Twitter space yesterday. But obviously these are kind of the concerns that we've been talking about encapsulated here in terms of the update from Wedbush. So unfortunately, no more green tidal wave talk from Dan Ives. He's viewing the other way now at this point, but still reiterating an outperform rating on the stock with that $175 price target. Other news today, we didn't have a ton of Tesla stuff, but probably the most interesting one coming here from Tesla Shanghai on Twitter. So it's been a while since we have heard from this account. You may remember that they used to have many updates a few days ahead of the end of the month that would give us some insight into what China's retail sales would be, Tesla China's retail sales would be for the month. And they've historically had a really good track record. So today coming in and saying Tesla China will be selling more than 100,000 vehicles in December. He said that, this is the information he's hearing, or this account is hearing, and that they were also surprised too. They also said that they believe this is, 90% confidence in terms of the level of accuracy or the confidence that they have in the accuracy of this information. So it is very interesting, again, given the track record here, that this is just grabbed from our older videos when we used to get updates from this account pretty much every month or more frequently at least. It's been a long time. But you can see pretty good error rates on these, on these pre-announced numbers that Tesla Shanghai had shared. I can't remember exactly why I had the asterisks on some of these numbers, so there must have been something there that caused that to be something that I didn't calculate an error rate on. Have to go back and figure that out, but historically you can see here these have been pretty close to what we have ended up seeing. So that is why this is a little bit more eyebrow raising than it may normally be. That being said, I personally do not believe that this would be accurate. If we just run through some simple numbers here, in the month of December, if Tesla was running full production every single day, 31 days for the quarter, and we use November's record production daily rate, and even if we increase that a little bit based on the increase that we saw from October into November, and we just say, okay, 3,000 vehicles per day, that's 93,000 for the quarter. You would then need to add some inventory to that. As we have talked about, Tesla actually drew their inventory down in November by about 12,000 vehicles. So you'd have 2 months in a row of significant vehicle drawdowns to even be able to hit this number. You'd need at least 7,000 there on top of, again, record production every single day for the entire month of the quarter. To even get close to a number like this, you'd have to take half that inventory down. So that is already a stretch. Plus, as I talked about, this account has historically only given us retail or domestic sales in China. They've never really said much about exports. Maybe a couple times they've mentioned it, but usually they're talking only about China sales. So for them to hit 100,000 in China alone, huge stretch already just based on what we know production and inventory numbers to be at their max capacities. And then you've got to consider that Tesla already drew that inventory down a little bit in the prior month. So to me, looks super unlikely. Then we also have the first 2 weeks of December from an insurance vehicle perspective coming in at 23,000 combined in those first 2 weeks. So, okay, then you're at like, 38,000, I think, for the remaining couple of weeks there each week, which would blow away records by far. And we'd already seen that start to downtrend a little bit last week. So really doesn't fit with any of that data. And then, of course, we have the questions on production as well, which if there's any sort of slowdown there, that's not going to happen. So we'll talk about the production in a second, but just kind of a point here to note is that this account did tweet back in November that China has a demand problem, and it's actually worse than anyone imagined at the time, and showing no signs of getting better. So again, same account here. This would be quite a contrasting statement versus what they had tweeted a month ago, which since they conflict so much, one of them probably would have to be a little bit inaccurate. So again, maybe this includes exports. I guess that's possible, but you still have the big questions on production in that regard. And we do have an update there from Wuhua today, and he is saying on Twitter that last week the Giga Shanghai factory did begin to slow down production. So updating us on that on Twitter. And then he's noting that a lot of Shanghai's production right now seems to be meant for export. He says he saw trucks that were passing by the factory that had AU written on it, presumably posted for heading to Australia. And he said that it seems that the factory site is not as busy as last week, which may be the performance of the production reduction. So we'll see. Again, the combination of rumors that we have heard was that Tesla would be slightly reducing production from a shift or days of work perspective heading into sort of Christmas, and then the week of, I think, the 26th through January 1st. The other rumor that we had was that Model Y production would be shut that whole week. So we're maybe seeing the early signs of some of that being accurate. As we've said, we're not going to really have visibility to that until the end of the month. But with this report, that even further calls into question, with all those other reports that we have had, this being possible. If there's any slowdown in production at all, this number becomes unattainable. So I'm highly skeptical of it despite this track record. I think that it's more likely than not that this is not accurate. All right, moving on to US stuff. So we've got an update here on Tesla inventory. So this is just tracking the inventory that is listed on Tesla's website over time. And, there's a lot of debate on whether or not this is all encompassing, because Tesla may post a vehicle in its one configuration. They're probably only going to show that once on the website for a certain location, but they may have multiple of that configuration available. So it may not necessarily show every single car that Tesla has in inventory, but should give us a decent proxy for how directionally inventory is changing during these periods of time. So with this, we can see that inventory has been rising in terms of what's available. Then yesterday, after the addition of the $7,500 credit rather than the $3,750, looks like inventory has pretty steeply dropped here. You can call that a 30%-ish drop probably in the last day or so. So looks like that has gained some traction and is resulting in a lot more demand here temporarily for Tesla. So hopefully that's good to see. Hopefully that can minimize Tesla's inventory. I know we're in a period of maybe unwinding the wave, maybe not, all this sort of stuff right now, but hopefully that keeps that gap a little bit smaller between production and deliveries for Q4, at least here in the US. All right, last few things here. So we've got an update on Twitter. Some people found that part of the Megapack code on the website may have disclosed some information on margins. I've tried to look through this, and maybe someone else can do a better job of deciphering some of this stuff than I can. You can see things like margin rates and cost structures in here. I was having some trouble like kind of piecing it all together to get anything meaningful. And even if these are sort of accurate numbers, I think that they're probably more directional than anything, because you can't really figure out the gross margin on a product like this until the quarter is done, and you can figure out all of the costs that need to be distributed across each unit from that perspective. So to me, it just doesn't make a ton of sense. But if anyone can maybe help out in the comments today with their deciphering of this, that would be appreciated. On Twitter CEO, so a report today from The Information, which I guess is probably mischaracterized as a report. This seemed just more like speculation from them, but they're saying that a possible candidate for Twitter CEO position could be Boring Company CEO Steve Davis, who was one of the earliest SpaceX employees and has been tasked recently with a lot of cost-cutting efforts at Twitter. They're saying that he could be a possible candidate. It seems to be, reading through the rest of the article, seemed to be mostly just speculation on their part, so I'm not sure really how much it's worth discussing. He definitely seems more of like an operations type of role rather than the CEO role, but maybe that would be what Elon would be looking for. Beyond that, probably not worth spending too much time on, because again, I think it's just more speculation on The Information's part. And then last couple of things. So Holmar is on Twitter noting that Tesla is offering a free 30-day trial of enhanced autopilot worldwide for the holidays, which I think is an exciting move. We've actually talked about something like this quite a few times in the past on the podcast, that offering things like this should help increase the take rate as people get to experience it, especially auto lane change. I would definitely miss auto lane change a lot if I did not have that. So especially around the holidays, giving people the opportunity to sort of experience these features, get used to them for a while, when there's presumably a lot of traveling happening, should be good to help that take rate in the future. So I think that's a great move from Tesla there. And then lastly, just looking at the calendar for next week. So of course, on Monday, the markets will be closed. I'll likely be off as well, pending any major news. It's a volatile period of time right now, so maybe we'll see some stuff that will require that. But current plans are for no episode on Monday. And then in terms of economic reports next week, should be pretty quiet as we wrap up 2022, which I guess hopefully we're all ready to do at this point. All right, that'll wrap it up for today. As always, thank you for listening. Make sure you're subscribed and signed up for notifications. You can also find me on Twitter at Tesla Podcast, and we'll see you next week, probably for the Tuesday, December 27th episode of Tesla Daily. Thank you.